Hi everyone, let's cover my bullish and bearish Elliott wave scenarios on Bitcoin on the 4-hour time frame. The probabilities at the moment remain higher for price to still find another low, as this move to the upside has a higher probability of being a corrective structure compared to an impulsive structure. And for the probabilities to change, we still need a lot more information. So let's start with two bearish options that I have on the 4-hour. First of all, a WXY structure with currently here a triangle in a wave X. So we then have a 3-wave structure in a W, a running triangle in a wave X, and then we would look for another wave Y to the downside. Currently here, working on this wave C, or either finished at the current high, but for the sake of structure, it would actually be nicer to label this as a W, get an X, and then look for another Y. So it's more spread out, takes a bit more time. W and Y also more in sync with one another, but the minimum target for a wave is C, being the 0.5, has been hit. It's the minimum common target. It does not necessarily need to go above this high. It would be nice though. Also, if we look at some of the resistance areas here, we just missed out on hitting this target box, 88.2, 88.5. Above that, we have 92.4, 93.4K, which is very interesting resistance, as we also have a weekly naked point of control at 92.5K. Now, in this particular scenario, we basically look for a continuation of the range. So we want to range, and then drop down. We do not want to take out the low of B here at 76.5K. We also don't want to take out the high at 95.1K. These are the invalidations for this scenario. When C is finished, we look for D. D preferably is a simple zigzag structure, a 5-3, a 5-wave move, ABC. Same with E, preferably a 5-3, 5 ABC. And then we get wave Y to the downside, which also should be a zigzag, being a 5 impulse, 3 correction, and another 5 impulse to lower prices. The most bearish scenario is actually a diagonal. And in this scenario, you do take out this low. That's the biggest difference with a triangle. With a triangle, you want to continue the range. You want to form your wave D. You want to form your wave E as well. And only then do you move to the downside. But in a diagonal, you basically move down immediately and your wave D in a triangle does not hold. That is the biggest difference. As you can see, here you would look for a D and E, but here you just move towards the downside. Now, the price action here can be relatively similar. Of course, you can end it over here and move down already, get a bigger WXY and then move down. Same as a triangle, perfectly fine. Would be nice again to hit some resistances, but it mainly depends on the local price action here. But nonetheless, we look for a 1, 2, 3, 4, 5-wave structure, then a 3-wave corrective bounce, and another leg to the downside. In this scenario, you could put this wave 3 here at the 76K low, now looking for a 4, and then the bold line over here, this one, is then your wave 5. If you do this, your wave 3, however, is very short compared to your wave 1. You can see the vertical line on the chart, the fib time taken from the start to the end of 1 to the end of 2, comparing 1 with 3. Preferably, wave 3 would end after the 0.382 fib time, and this low didn't, right? So that is why I also have the dotted line here, which basically means we could end wave 3 over here, wave 4 over here, and get the one final drop in a 5. Nonetheless, in both cases, you still look for the low to be taken. The invalidation for a wave of 4, in case that is your preferred scenario as well, would currently be around 92.2K all the way to like 91.8K, right? So this line over here. Now, where does the line come from? If this is the scenario, you take a channel from the low of your 1 to the low of your 3 to the high of your wave 2. And in a contracting diagonal, which is the most common diagonal structure, your wave 4 should not touch the upper trend line of the channel, which is an invalidation. Another invalidation is the 1-to-1 trend-based fib taken from end of 1, end of 2, and then the end of your wave 3. And then, toggle on the 1 over here, but you can see that this level is above this level, so it doesn't make sense to me to have this white 1-to-1 on the chart. It's much better to just keep this line and avoid the clutter. So in this scenario, we look for price to still move down Also to the downside, we do still have untouched weekly naked point of controls. They're everywhere. Like sometimes we are in a period where rarely ever you actually see higher time frame point of controls, naked point of controls, and here you have one at 92.5, 81, and 76. None of these have been touched. Even the one here at 81 was just missed by a hair, and we have a monthly naked point of control at 96.2. So it's very interesting. But in this case, weekly naked point of control at 76 is an interesting support level. And what you see, which I suppose is important here, is that if you do lose 76, there is not a lot of stuff going on here below 76, all the way down to then 68.8. So if you flip 76 into resistance, then yeah, very likely 68 is going to be the next area of interest. Now, what do the bulls want to see? Because at the moment, we're of course in a downtrend since the all-time high, the move to the upside here, seemingly corrective on the lower time frames. When do probabilities switch bullish? When can we look for example, swing trades to the upside and look for great buying opportunities? Now, I am personally not a trader that likes to snipe the lows or the highs. I'm a very patient guy. I don't mind missing out on a potential first structure and then just trade the correction, which is also how I personally approach looking for longs, right? So of course you can trade longs on a 1 hour, 50-minute time frame. But from a more swing perspective on a 4-hour time frame, if we would have a finished structure, WXY here, so you have a 3-wave ABC, X is complex, a sideways double combo for the ones interested, WX flatten Y, and then another A, B triangle, and then a wave is C to the downside, right? In this case, we need an impulse to the upside, or at least an impulsive structure. And there are 3 impulsive structures. You have the traditional impulse, 1, 2, 3, 4, 5, right? You have a diagonal, 1, 2, 3, 4, 5, correction, a continuation. And you have a multi-1-2, which is what you see here on my chart. And with a multi-1-2, preferably every lower degree 1 and 2 is shorter in time and price, which is not the case here. This wave 2 here in white being a lower degree wave 2 compared to the blue one. So this one usually is bigger in time and price. That's not the case, as the white wave 2 is about 3-4 times bigger than the blue wave 2, which lowers the probabilities. This also has to be another 1, another 2, and then continuation up. So that becomes a triple 1-2, and it's just not as pretty. But hey, I would be very happy, of course, to be wrong. But at the moment, the probabilities aren't really highest for this to be a multi-1-2 or impulsive structure. It looks better as a corrective structure. Of course, alternatively, you would possibly look for a diagonal, but we don't yet have the information for a diagonal, like a 1, a 2, 3, 4, and then a wave 5. But before we really start covering diagonals, preferably your wave 4 is at least finished, which is not the case. So multi-1-2 would be your best bet, but the best bet in this case still has lower probabilities than counting this as a corrective structure like a double zigzag structure. Now, when does it change? If we do move towards the upside, we want to see an impulsive structure. That's what we're waiting for. High amount of volume, looking for a wave 3 to the upside, right? Very clean, not a lot of overlap. 1, 2, 1, 2, 1, 2, poof. And then we get 4, 5, 4, 5s. Typical impulsive structure, grinding at the start, quick move up, grinding at the end. That is what we like to see if this turns into an impulse. So this is the grind at the start, quick move up, grind at the end, then get the drop, right? Even though the grind here at the moment, not too great as a multi-1-2. Now, I don't mind missing such a move. It's about probabilities at the moment, not highest for the bulls, right? But if we get a nice 5-wave move up here, right? And then get a 3-wave retracement down, oh yeah, I'm going to get my position calculator out there and I'll be looking for some very nice long opportunities during the retracement. Eventually, price always retraces, and this move down has to be a 3-wave corrective structure. 5 move up, we want to see a 3-wave move down. So for example, a zigzag, as I've drawn here, 5, 3, 5, get another move up, take out this high, pretty much confirms a corrective structure. And then over here, this is where the opportunity eventually lies for a move to the upside, expecting at least this high to be taken, right? But it needs a lot of patience, takes a lot of time, and at the moment doesn't yet have the highest probabilities. It can have if we do get that impulsive move to the upside. So if we then look at the probabilities, then from an Elliott wave point of view, on the 4-hour at the moment, the probabilities remain higher for either a triangle WXY here or that diagonal, looking for at least another low is at the moment your higher probability bet based on Elliott wave analysis. Now, locally though, on a lower time frame, I would like to see some target box resistances hit. So if we do actually jump to the 1-hour time frame for a second here, toggle on the resistances, then yeah, I heard someone in the comments, I think Craig, mentioned there was a anchored VWAP over here, but I of course use other tools and generally my boxes are very nicely respected, and this one over here did not reject at any of my boxes. So honestly, like just from a box point of view, I suppose, right? Either turn around close to the boxes or actually touch the boxes. It would be nice to still hit some resistance above. So locally, I'm very interested in still looking for price to move up. I just need a little bit of sign of strength. Make sure to check out the live stream of yesterday where I explain exactly how I am approaching my trading in this area, right? So you can check that out. But over here, would enjoy seeing some target box resistances hit above the recent local high after touching support locally. Support locally, let me just turn on all the levels. Over here, we have a point of control and daily, 83.2, 82.6K. Interesting area down here, 82 as well. So those are some areas to the downside. Would also give a cleaner double zigzag structure. If we do look for a double zigzag, can we end a WXY here? Theoretically, the answer to that question is yes, which is this one over here. So you have a W, you have X, and this is your wave Y in that case. Wave Y is very short in time, right? The 0.382 minimum time target. This candle closed right after the 0.382. So minimum time target has been achieved. Also the minimum price target. But it's not the common area for a wave Y, nor price-wise is the common target area for Y reach, which is actually a little bit higher. So just from a ratio analysis point of view, which is important in Elliott waves, it would be nice to have a WX and then get a bit of a bigger move, still reaching out to some of the resistances. I'm interested. I'm just waiting for some signs of strength locally, which I write here as well. Now, probabilities on the 4-hour higher for another low. So counter trading that direction, meaning longs, right, should be done with care and a good plan, right? And if you don't have a good plan yet, just make sure that you watch a video that I have made in the educational playlist. And that is this one over here, right? So make sure to check it out. It helps you build a plan. You can build a plan in a very short amount of time. It will significantly increase the win rate and the profit of your trading, right? We don't trade based on emotion. We trade based on a plan. Now, the weekend is coming up. If there is any volatility, then let it be today, before the weekend. Once the weekend starts, you can check the statistics over the past years. Most commonly, the weekend is a sideways ranging structure. Not always, never 100%, but by far most often, the weekend is a sideways ranging structure. So if we do get any sort of volatility, then very likely it will be today. There is no high impact news today, but it doesn't mean the chart cannot move on days like these. It can definitely move on days like these. So just something to be aware of course, with regards to the weekend coming up. And that is pretty much what I wanted to say. And yeah, I shared what I'm interested in, what the probabilities are, and how the probabilities change. So let's see what we get. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing. I hope to see you at the next one. Bye bye.